Have you ever felt like you're doing everything right with your money? And yet, you're still not getting ahead. We were told the formula is simple. Invest in the stock market. Buy index funds. Keep doing it for 30 or 40 years. And eventually, everything will work out. But deep down, something doesn't feel right. Because the stock market was never designed to solve the problem of money. In fact, the stock market was never meant to replace money. Still, millions of people are forced to treat it like money, because the money itself no longer preserves its value. Think about that for a moment. People don't invest only because they want to own great businesses. Many invest because leaving their savings in cash almost guarantees they'll lose purchasing power over time. For many people, investing has become less about getting ahead and more about trying not to fall behind. That isn't building wealth. It's simply trying to preserve it. The stock market has historically generated positive returns over the long term. But there's an important question almost no one asks. How much of those gains are simply compensating for the loss of purchasing power caused by inflation? We're often told inflation is only 2 or 3%. Yet the rising cost of everyday life tells a different story. So while your portfolio may be growing, your purchasing power often changes far less than the numbers suggest. It's like rowing against the current. You keep moving, but most of your effort goes into avoiding being swept backwards. And there is another challenge. When you invest in the stock market, you're participating in a system whose rules you don't control. Markets respond to interest rates, monetary policy, government decisions, and countless economic forces that individual investors cannot influence. Your investments may perform well, but the monetary system beneath them can still be quietly eroding the value of your savings. Bitcoin offers a different approach. It isn't a company. It doesn't have a CEO. It never closes. And its monetary policy cannot be changed by a board of directors or a central bank. Bitcoin is transparent, verifiable, and governed by rules that are the same for everyone. For the first time in history, you can save in a form of money whose supply cannot be diluted. Then, there's the question of ownership. When you own stocks, your ownership ultimately depends on financial intermediaries. Your broker, the financial system, and the market infrastructure all play a role. But when you hold your own Bitcoin keys, you control your money directly. No intermediary, no permission, just true ownership. This doesn't mean businesses are not valuable. Actually, they are. But stocks represent ownership in productive companies, while Bitcoin represents ownership of money itself. Both can have a place, but only one was designed to solve the problem of money. Because good money shouldn't force you to become an investor simply to preserve your purchasing power. It should protect your time, respect your work, and allow you to save for the future with confidence. And that's what makes Bitcoin different. If you enjoyed this presentation, don't forget to leave a like and subscribe to the channel. See you in the next video. And remember, stack Bitcoin to escape the system and become the next Sato Millionaire.